Hello and welcome to this Monday edition of FreightWaves Now. I'm your host Anthony Smith and also the lead economist here, and I'll be giving a shipper econ update shortly. But first, we're going to go to Michael Vincent with a carrier update brought to you by Powerfleet. Stay tuned.
Hello and welcome to the Carrier update presented by Powerfleet. I'm Michael Vincent. Let's get this week started off. Here we have the outbound tender volumes, and you can see year over year. Orange is 2019, green 2018 for reference as usual. Over in the right-hand corner, you can see that the outbound tender volumes continue to stabilize and move forward around 15,424, quite elevated and not showing any signs of weakening, although there is indications of a little bit of strengthening there, and we'll get into that a little bit. If we move on here and look at the outbound tender volume index by length of haul, the green is the long haul, and then you have your tweeners in orange, your mid haul in purple, your short haul in yellow, and then your city in blue. And we've talked about this before. When you see a spike in the long haul, you start to see it in the shorter hauls. The long haul, we're seeing another tick up, and believe that pressure is going to continue, and we'll jump into that in just a minute, but the long haul is moving forward. Now, one thing I wanted to bring into this today was this was the chart of the week. Zach Strickland, it comes out on Saturdays. If you haven't seen it, read it. It's a very insightful little piece there on freightwaves.com. We're looking at the average length of haul, and it's at 629 this year in blue. It's Aloha for all you sonar users, OALOHA.USA. And it's at 629. Now, you can see in the yellow, that's 2019, and the green is 2018. Now, this is indicative of obviously the push forward and the pull forward on the vans and the reefer to try and get the product to market as quick as possible. As we move into the holiday season, we believe that this will continue. This causes special strains on capacity. As the length of haul increases, that turn is a little bit slower. Moving on. Here's one of the reasons we believe that this is going to continue and move. Here's your port index, your import shipments. On the left-hand, or on your left-hand side here, we have by the different sectors, the imports by different sectors over a monthly change. And you can see retail trade obviously up 41.8%, but distribution up 8.3%. Non-durable goods at 14%, computers at 20%, but durable goods as well at 23%, and manufacturing at 13% up, indicating that the economy is doing fairly well right now and strengthening. On the right-hand side, you can see it year over year. Blue is this year, and you can see that the trend is definitely on an upward tick and continues that higher level over the last few years. If we look at our ocean TEU volume index, now these are bookings that are coming into the United States 7 days out, not even stuffed in containers yet. A little bit of weakening on the shipments, but nothing to be worried about. That is still quite high, as you see some ports or import countries are at 200%, 100% over previous year, and the TEU volume continues to go up. The number of TEUs is still going up. If we move forward and look at our outbound tender volume index, you can see the usual players here on the coasts that are strong in the outbound tender volume. The height is the outbound tender rejects. If you look down here on the border here of Mexico, Laredo, El Paso, etc., you can see it elevated quite high in rejects as capacity is still very much under pressure there on imports, further making that case. Outbound tender volume index still up, outbound tender rejects still up. Rates. We've got our 7-day flatbed rate per mile, and our reefer and our van, and all of those pressures are moving higher. If we move into the outbound tender volume index, we'll look at Atlanta, Joliet, Allentown, Cleveland, Ohio, Boston, Mass, all strong moves in the head haul volatility, meaning increased pressure on those outbound tenders. If you're in those markets or near those markets, really good place to go find some freight and keep your assets moving. The outbound tender rejects, this is why it's still pressure and there's capacity and rates are moving up across the United States. You can see New Orleans, Mobile, Elmira, New York, Syracuse, Brooklyn, Cleveland, Ohio, Philadelphia, and many others still in the very strong volatility towards tender rejects, high pressures. If we look at reefer, Twin Falls, Salt Lake City, I wanted to bring this up. This was on the update this morning if you get your Sonar newsletters in the mornings. Reefer rejects in Twin Falls, 78.72. And that'll do it for your carrier update. I'm Mike Vincent.
The comprehensive logistics offerings from Powerfleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with Powerfleet.
Hello and welcome to the Shipper Econ Update. I'm the lead economist here at FreightWaves, Anthony Smith, and today we're going to talk about a couple of my favorite indices, starting off with the Logistics Managers Index. Here behind me in the purple line, I have the LMI, or Logistics Managers Index, and in the green line, I have Outbound Tender Rejection Index. And so real quick, when we're talking about the LMI, overall, this is very similar to the PMI, wherein anything over 50 is indicative of expansion, while anything below 50 is indicative of contraction. But this pertains directly to the logistics industry. And so what we can see here in the purple line for the LMI, this is the total composite measure. And we can see that this is up into the 70s, so well above into that expansion territory. And we see that is in close alignment with our very own Outbound Tender Rejection Index. And so what's powering and what's behind some of this historic rise or near historic rise, this is the highest it's been since fourth quarter of 2018, is a definite crunch in capacity and an increase in transportation prices. And so when we're looking at the green line, our Outbound Tender Rejection Index, that is indicative of a capacity crunch. And when we're looking at the close relationship to the purple line here, the LMI, we can see that they're moving in unison. Now, as I mentioned, one of the things that's really powering that rise is transportation prices, and we can see that here in this transportation subcomponent of the LMI. We see that this is now up to 87.85, so near 88, almost in the 90s. So that is very much in expansion territory and an increase on a month-to-month basis. And so we're looking at the LMI. That is what's really pushing up a lot of the upward momentum that we're seeing in the overall measure. The other thing that's contributing to the capacity crunch overall within the logistics industry is the warehousing capacity subcomponent. We can see that warehousing capacity is down to 43.1. So that is showing us that warehouse capacity is definitely at a premium right now. This is going to be something that's going to likely be amplified as we move forward throughout the month and into the latter half, or the rest of the year, I should say, where we're seeing a lot of e-commerce holidays on the horizon. We're looking at Amazon Prime Day and other outlets that are going to start priming up for any type of to get in on the e-commerce holiday situation, like Best Buy, Walmart, Target, all those folks. And so we can see as we get closer and closer to some of these consumer-facing downstream components of the economy, this is really going to be much more constrained. That's going to lead to a lot more transportation prices as well. So one of the other things I want to bring your attention to here is the Institute for Supply Management, PMI, so the more traditional measurement. And when we're looking at the PMI, usually we look at the manufacturing index. So this is going to be a little bit different, looking at the non-manufacturing segment. And this is going to be more indicative of the services side of the economy. So a lot of times when I look at the services side, we always say that that doesn't directly affect freight movement, but there are some implications. So within this index, one of the things I want to bring your attention to is the subcomponent for employment. And so in this next slide here, I have in the purple line the ISM non-manufacturing index for employment, and we can see is that it is moving up. And so the latest numbers show that it moved up over 50. So just over 50, showing that there is expansion within employment within the industry for the services side. And so this is the first time since the pandemic that this has moved into expansion territory, and that's going to lead into more downstream growth for retail sales as more people have more disposable income. That's going to wrap it up for this edition of FreightWaves Now, and that's going to end this segment for the Shipper Econ Update. Thanks so much for tuning in, and as always, you can check out our FreightWaves app on all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.